Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Wednesday, 27th of June. Today we got a little bit of mixed data from the economic world. First, durable good orders came month over month, way higher than expected. We were expecting in the negative orders, but look at this, 1.7% still in the positive, excluding transport also in the positive, and excluding defense 3%. So orders coming in heavily. For the home price and the Case-Shiller home price, as you can see, the month over month came higher than expected and higher than the previous one. Year over year, we are still in the negative, but month over month, you can see this is the third straight month that we are increasing prices in the home sector. Regarding the index, month over month, 0.7% higher than expected, year over year as expected, and the index remain heavily in the green. Consumer confidence came 1 hour later. Everyone was waiting to this one. It came 109.7, destroying estimates and consensus of 104. This is one tricky data, because when you see prices going up, when you see orders going up and consumer confidence going up, you think that the economy is actually strong. But right now we are in a context in which the Fed is trying to fight inflation. So this is not good for the Fed because it shows strength in the consumer, strength in the prices. New home sales 12.2%. Look at this. The previous one was 3.5 and we got almost quadruple that. And the next two data is regarding services. Richmond and Dallas. Remember that in the CPI and the PCE, Fed is focusing on the services inflation, sticky inflation that is remaining stubborn. So these data, services, Richmond Fed Services Index and Dallas Fed Services Index came in the negative. Quite in the negative. Regarding Richmond, we were expecting 7 and we got -3, and Dallas we got -8. So it came at 10.30 after all this data showing that the Fed still has some work to do. So what happens in the market? At 10:30 to 11, we see a change on sentiment. Let's start talking about the daily, because as I was mentioning yesterday, as we were sharing the videos in yesterday's videos, we were watching this 61.8 around 14,800. Well, look like we didn't get this one. We check the 1 hour chart, we can see that this descending triangle is still in play. I was watching this yesterday's. Basically, this is a huge descending triangle, or even a weird head and shoulders, that we broke the neckline to the downside yesterday quite heavily into the close. So regarding pre-market, as you can see during pre-market, we saw that settlement, pre-market lows, yesterday's close, everything was creeping higher and higher and higher. And then at the close, we started chopping around. We started chopping, economic data started coming out, and until 10:30, as you can see at here, we were trying to build some higher lows, and we did this at 11. At 11, we started pushing higher after 1, after 1, 2, and 3 taps of the low of days. So even though the price action was stubbornly hitting this neckline that we saw in the 30 and the 1 hour chart, we were holding. So I was waiting for something to happen. And we got two options. Either we broke low of day, we broke yesterday's close heavily, and we started accepting price lower through pre-market low, settlement, and yesterday's low, or we basically start building momentum higher, and all this price action was accumulation. So that's what happened. Basically, I took this consolidation in this pivot. So let me just focus on the trade that I took. Basically, this pivot and this overhead resistance, I took this consolidation on this pivot, and I think I bought here at 957, around here. My stop was the low of the consolidation, 1.57, 1.7, yeah, here. The stop was the low of the consolidation, probably this close, and I was targeting this descending resistance that it was the descending triangle that we are now testing, and most probably we are going to hit. We are going to maybe target even higher on the day, because look at these 1 hour candles. We've been grinding higher and higher, and this is a 9-to-1 trade long that I took out at 71, around here, and it was actually here. And now I'm doing the video. So basically, this price action is typically after big accumulation on a low of day, on a basically on a day in which you don't see progress to the downside, and you start seeing this kind of grinding price action that is typically performed by high frequency trading algorithm. So basically you can take advantage of this price action, but you have to really take time with patience to really develop, because as you can see, it took like 2 hours and 20 minutes for the trade to completely develop until my target, and it continues higher because shorts keep trying to short and to short and to short. And this is my trade. So basically 120 points or more than 2000 on the day. Quite happy because I was patient. I was disciplined to really not take the short down. I was bullish on the day, and the data, I waited for the markets to digest the data, and the services in the negative, I think, was quite a key indicator for today. You have to really wait for the market to decide, because sometimes you are in the wrong side and you can change by seeing the price action. Today I was patient and it was a really nice day. So let's review who is strong today. Basically, Apple is knocking on the door of the all-time high retest at 188. You can see it's starting to again tap on that after yesterday's sell-off that everyone was saying this is the beginning of the big pullback. I have my doubts, and today I was placing Apple. As you can see, it's completely retracing this yesterday's action. Microsoft is almost there. It's also pulling a nice U. Tesla is far from that, but Tesla has another nuance that you have to pay attention. Look at this gap. We touched the gap and we immediately rejected. If we check the 15-minute chart, you can see that there's 3 big bottoming tails down here that avoid the price action. Bulls were waiting to this gap to enter to take positions. There are no shorts, no bears willing to commit to fill this gap, and Tesla basically touching and rejecting the gap enter is basically a signal for maybe that a move is coming to the long side. Amazon also quite strong, 1.65, far from retracing this move yesterday's, but between Tesla and Amazon, XLY consumer discretionary is up 2%. The greenest, the biggest sector performance of today apart. And then we have XLK that is basically doing a nice V reversal. You remember the times months ago, weeks ago, when we had things like this over and over and over. Well, today was one hell of a day. We are breaking out this descending resistance and creeping higher towards 15,100. Look at this. I am not greedy. I don't care if it goes to 200 or whatever. I have my money, but sometimes you really have to pay attention to key pivots and, most importantly, what didn't happen today. Sometimes it's not what happens, but what does not happen. And we today we hold the lows, and we didn't break down. So that was a signal of perhaps it was building some strength to the upside, and that's what happened. So sometimes you have to read the market like this. Nvidia 2.43% on the day, recapturing yesterday's price action and almost hitting my buy signal. I was waiting for 400. Oh man, this hurts a lot. I had an order down here at 400, way below, around here, 399.50, and it didn't get filled. Well, let's see if Nvidia can pull the retracement. This was a very heavy day for Nvidia yesterday, 3.74, and we are seeing some strength today, but let me tell you, yesterday it was a lot of profit taking. And Meta, another name that it's trying to pull a bit reversal, but it was too much yesterday. But today, 3.34%. We are still watching this big gap overhead towards 323 on Meta. Quite impressive what Meta is doing on the daily. Unbelievable. So this is for Nasdaq and stocks. Let's watch the convergences with this strength. Dollar is seeing some weakness today, minus 0.26%. It's quite choppy. It's not super weak, but it's not progressing as I was expecting after this trend line and this support, previous resistance, bounce. I'm still waiting to see if dollar is able to pull this move to 105. Let's see what happens. But remember that when dollar goes down, stocks and indices usually go up. Another thing that is pulling a divergence today is gold. Metals overall are not as strong as technology right now. But this is because China is not pulling off the kind of recovery on their economy that, for example, Europe and US is trying to show. And China low demand on copper, on gold, on silver, and other metals, semiconductors, and all those things have an impact on these charts. And as you can see, gold is in the red, looking quite bearish. Dr. Copper rejecting, because this shows you that there's a sickness in the worldwide economy. And you can see it's rejecting. It's not as strong as, for example, technology sector or energy. And silver, despite this bounce of the feed retracement 61.8, look at this. This is just bear flag consolidation. There's nothing good about this chart anymore. So metals are showing the worries about the economy. But let me tell you, Nasdaq and S&P 500 are not the only ones that are trying to push higher. Look at the Russell. Russell is pulling today 1.74%, and Bitcoin is also pulling a 1.50% at this huge move, because Fidelity it's also jumping on the hype of the spot ETF for Bitcoin. Yesterday or last week was BlackRock, now Fidelity. Who else is jumping on this? But what is certain is that Bitcoin is liking this kind of action. But be careful, because this is just another one on the queue. Nothing is certain. There's no assurance that the SEC and other regulators are going to approve this spot ETF following Bitcoin. So maybe BlackRock, Fidelity, and all those are going to see how the doors closes at their face. Be careful because this is just pure speculation. What else is interesting? Well, strong economy in this context shows you that the yields are going higher. And usually this is bad for the stocks. But as you can see, Nasdaq is quite strong today, 1.64. So be careful because perhaps this is just a bounce to pull basically a lower high in here. We are still in that range, in this angle between the yellow and the red. I'm watching this level, 15,143, because even though this is a strong move that you can certainly take advantage of, I think this level is where the bears are at. They are waiting, and if until you can see clearly push support and then going higher, I don't see this trend, this huge descending triangle, to be reverted 100%. So with that on the back of your mind, you can see that yields are basically in the green, quite in the green. Look at this move from the SVB crisis and then pushing higher. Bonds market are not pricing in anymore any interest rates cuts this year. This is December, and as you can see, we have 5.33. We are pricing in. Let me show you. Let's check the probabilities on the FedWatch tool. We are pricing in 25 basis points for July, and then with 80% of probabilities, and then until the end of the year. What changed today is that January 2024 had an interest rate cut here, but as you can see, it's now showing flat. So we are going to be at this level higher for longer. 1, 2, 3, 4, 5, 5, FOMC 6 months, and then markets continue pricing in 25 basis point cuts throughout all 2024. So be careful because economic data, despite markets are liking that and are showing bullish price action, you have to really pay attention to what the probabilities are and the context of the fundamentals and the economy for 6 months, 8 months ahead, because this is not looking good. And whenever this happens, this is not going to be good for the stocks nor the tech stocks, because they hate higher interest rates. So what is happening here is that the stock market is getting greedier and greedier, and basically bonds market are freaking out, saying, well, yields are still going higher, and let's see what happens. Higher for longer may certainly impact heavily on the stock market, but timing is everything. So for now, we are just seeing some kind of bounce and maybe perhaps the higher low that we were looking for on the grand scheme of things. Who knows? But we have to really pay attention to the price action here and watch key levels. For now, on the 30-minute chart, we are really pushing higher, quite strong. And let's see what happens up here and how we close on the day. And I think that's all. Quite quickly, banks are all in the green. That's good. XLF was struggling last week, so we are trying to push higher. And what is more important is that RSP, the equal weighted ETF for the S&P 500, is showing 1.22% in the green, and we are broadening the bulls. Other parts of the markets are also pushing higher, and not only RSP is showing that, but also the percentage of stocks about above the 200-day moving average, it went lower, but today is pulling at 2%. We need to reclaim the 50 mark that we got here, because if not, then we go back to the fact that only the Nasdaq and only these big tech stocks are the one pushing the overall market. And that's not what you want. You want the bullish run, you want the market to follow these huge tech stocks, broadening the market and having all those stocks following the bullish run. That's what you want. But for now, looks like they are lagging a little bit behind. Let's see what happens today and the rest of the week, because tomorrow, let's recap. Let's do a quick review of what is going to happen tomorrow. Because tomorrow we have Wednesday, we have Powell speaking right at the open. And let me tell you, this is going to be insane. Thursday, we have jobless claims and PCE prices for quarter over quarter. This is going to be also huge. And on Friday, we have the actual PCE for May. So starting tomorrow with Powell and then Thursday and Friday with big economic data, you really have to be paying attention to the markets and manage your risk, because this is going to be huge. We are going to see markets either liking the economic data and going higher, pulling this nice higher low that we were expecting on the daily time frame, or we are going to see markets pulling lower high up here and not liking the economic data and really starting changing the trend to the lower side. So it is what it is right now. Congratulations if you were long, because you had a really nice, look at this, really nice push before noon. And that's all from my side. As always, thank you for your time. If you like this video, if you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Congratulations, bulls. You did it again. Looks like a lot of these tech stocks are pulling a V-shaped reversal. But let's see what happens tomorrow and the rest of the week, because key economic data is coming out. So be patient, manage your risk, and remember that those two are really key for your success. Stay safe, everyone, and see you tomorrow.